Hello everyone. If you are invested into Amazon and Apple, stay tuned to this market update because I'm going to review the key takeaways from these two earnings and why you should actually be happy about these earnings and why actually I'm pretty much convinced right now that the rally is still over. No, sorry, the rally is still on, and we're going to see a full recovery from the market from now because all the big tech has actually reported the earnings. The earnings has beat expectation. The earning has been very, very good. We see that the spending for AI are still very good, and we see that the future is still this big AI trend. So I think we should be happy that the market is continuing its rally, and then it's continuing its recovery. And again, once again, congratulations for those who have not sold their portfolio during the peak of the VIX and had actually followed this channel, and actually are very happy right now. Of course, you have not fully recovered your loss, but you have recovered a big of it. And you will recover most of it, and even you will earn by the end of the year. You will be into profit, for 100%. Okay, let's look at the market, and then we go to the earnings of Amazon and Apple. Okay, first of all, let's start with QQQ. You can see clearly that QQQ is up again today, 1.48%. I mean, it's just smack into the 200 moving average. It's a very, 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 very significant level, and it should be tested, or even if it break out over the next few days, then that means we are going back to all-time high, because we're going to go back to the upside channel, that we actually started back in 2023. You see this upside here? Then we're going to go back to that channel and really continue to on the way up. One thing you have to notice, we are in the upper range of the Bollinger Bands, which actually should warrant some pullback, some retest, and probably a breakout. Volume is not so high, but still a decent volume. RSI definitely on the upside. Bullish RSI, we know 61. SPY, we are 1.48% up. Definitely also smacking the 200 moving average. And also going up to the all-time high after that threshold is actually breakout, IWM for once is a 2%, 2025, and actually it smacked right into the 200 level. And I told you that the 200 marks is very critical for IWM because that was the channel that they traded for many, many years. And this is when actually the market, the IWM, started to break out from those channels in the past. So if we break out again over the 200, we should go back to all-time high as well. If you look at the VIX, excellent news. We are 10% down on the VIX. Now we are 22, still elevated, but we will go right back to the 200 moving average at 1951 by the end of the week. But what is important is that we came back from 16, or we are about 22, which is an amazing return of situation. And again, it confirmed exactly what history told us, that when the VIX peak, the market bottom. If you look at Max 7, upside 124, we also right back to the 200 moving average, and then if we break out the 200 moving average, we should also go back to all-time high. We're still a fair way to all-time high for Max 7. We still have an upside of 20%. So there is a long way, but for the QQQ and the SPY, we are less than 10% from all-time high. So I think it's not too late to start to invest or DCA into the Max 7 if you were scared to do it when the VIX was at the highest. You still have a 20% upside to go back to all-time high compared to the one who actually suffered a loss from all-time high. Now they are suffering a 17% loss. So we are still down from all-time high, but this is Max 7 we are talking about. We're not talking about the general market. So if we go to Apple and Amazon, Apple, you see, down today 3.74 in terms of earnings. They beat both the earning per share and the sales estimate, revenue estimate, 165 as opposed to 162, revenue estimate 36 billion as opposed to 94 billion. So if we go to the specific of revenue of Apple was 124.3 billion. It's a 4% only increase year over year, which is also amazing compared to what the scares has been with China and the tariff and so on. So it doesn't show up yet in the balance sheet and the income statement. Net income 36.3 billion. It's $2.40 EPS. Services revenue 26.34 billion. It's a 14% year-over-year increase, and iPhone revenue is about 69.14 billion. It's actually a contraction of 1% year-over-year, but still is an amazing cash machine. Just imagine, iPhone revenue only is close to 70 billion. So Apple reported strong earnings with significant growth in services, other product line. However, decline sales in Greater China and anticipated 900 million in additional tariff-related costs present challenges ahead. And that's probably why the market actually sold on the Apple earning, because of the anticipated 900, close to 1 billion additional tariff-related costs for everything that is China-related goods and imports to the US. But actually, during the call, Tim Cook was saying that most of the iPhone would be imported from other country than China. I think he was talking about Vietnam, and he was talking about India as well. So I think what they will do is they will try to select which product is coming from which country to import specifically into the US. And I think they will reserve the exportation from China to the rest of the world except the US. Otherwise, an amazing news for Apple, you know. Amazon also excellent earnings, but you see, also very flat for the day. They also beat both on the top and bottom line. Top line beat by just 0.23%, and bottom line beat by 16%, which is an amazing beat, you know. And I think it's a great time to buy Amazon if you consider just DCAing your holding. Amazon below 200 is an amazing investment. I'll remind you that it's still down from all-time high of about 20%. So you still have a nice discount from all-time high for Amazon. And considering what we're going to hear about Amazon earning, key highlight for Amazon 155.7 billion. It's a oui, mon amour, après 9% year-over-year increase. Net income 17.1 billion is 1.59 earning per share. AWS revenue is 29.3 billion. Is a 17% increase year-over-year for AWS earning. You imagine everything that is cloud computing, AI is still very, very strong. And that's why I think you should invest into Amazon. Advertising revenue also extremely strong, is a 19% year-over-year increase with 13.92 billion. Despite surpassing earning expectation, Amazon cautious Q2 outlook and concern over new tariff on Chinese import led to a 2.21 drop after market hour. The company continued to invest in AI and infrastructure to bolster future growth. So both Amazon and Apple had very, very good earning. The guidance were a bit cautious with regards to the tariff, which is normal because compared to Meta and Google or Microsoft, they are less impacted with the tariff. It's not good oriented. It's more like online oriented. So the tariff doesn't apply to online services and online revenue and so on and so on. So it's only if you import goods, physical goods from China, that you have all this impact on the tariff. Otherwise, both Amazon and Apple deliver strong Q1 2025 result exceeding expectation. However, external factors such as tariff and regional sales decline poses potential hurdles. So basically, investors should stay informed and consider this dynamic in their strategies. Other good news as well on the economic front. Okay, economic numbers. We had manufacturing payroll minus 1,000 employment. Non-farm payroll 177, beat expectation. So definitely we don't see any deterioration of the job market. Non-farm payroll 167 as opposed to 124. I mean, that's an amazing numbers for job employment, you know. Unemployment rate 4.2%. I mean, with GDP contraction, unemployment market still very strong. I mean, there is some room to decrease rate, you know. Inflation is still under control. Excellent news on the job market, so we shouldn't worry too much. In terms of headlines, you see stock extend historic winning streak on trade optimism and job. US Treasury slide as job market give Fed rooms on rates. Stock rise for second week as tariff shock fade. Stock rise for second week as tariff shock fade. US employment at 177,000. Solid pace in face of uncertainty. China hit a possible throw with US in waiting trade talk. Basically all positive headlines. So that's why you should see the rally continuing today. Today, good day. We closed the week. Second consecutive week upside. And I think it will continue. It will continue to all-time high, you know. I don't see why it shouldn't. Other than that, thanks so much for watching this video. Please subscribe, like, and leave a comment. See you next week for a market update on Monday. Thanks so much. Bye.